Hi, everyone. Happy Wednesday. So, today we're going to talk about a question that has come up recently from one of my clients that I actually asked Jane about something that some questions or issues that we've identified for this client that I came to Jane for her guidance on. And I know that she was looking into this and researching this. We didn't even have a chance to touch base on it just yet. So we're actually talking about this and the answers to some of these questions for the first time. But what we were able to identify for the client is that there were certain loans that went out of the company for the benefit of one of the partners. And from that stems two questions. The first one was the more obvious, is whether a business is permitted to give a loan to one of its partners, whether they use it for the purpose of funding another business or for any other reason.
So to answer that, so first of all, one way it could be a loan. So it could be a legal, paper stating that, right? And that if it's a loan, it should be paid back with interest. If it's just money coming in and out, another way to look at it, it could be just a contribution and then the distribution that could be allocated to the partner, which most of the time is done. But if it's a loan, it just has to be legally stated. You work with, your office, you set it up, and then it gets paid against the loan for a short term or long term, depending of the structure, and then with interest.
Okay. That's very helpful. And then here we have in this specific situation, of course, we have some limitations as well from the legal side that we always look at because I did mention that if it's being funded to open another business. So, of course, from our legal side, we're always looking to make sure that there isn't a non-compete. Of course, it's not a competing business and that there's no solicitation of any clients or any employees. That's just from the legal side. But here we were really focused more so on the funds aspect because we did notice funds coming in and out. And another question that came up upon review was whether the business is permitted to invest in real estate.
So that is actually a great question, and that gets asked rather often. So yes, businesses are generally allowed to invest in real estate. I would say that the only limitation, if it's a nonprofit, there may be restrictions on real estate investments, so that could be looked at specifically, but in general, yes. So that could be purchased for many reasons. So like one of our clients purchased so they avoid rental costs, so they could buy office buildings, warehouses, retail spaces for their operations. Right. They could also invest in real estate to generate rental income or capital appreciation. And typically, structures include like LLCs, or it could be like a real estate investment trust and other could be other entities as well. And we could talk about it next time. I think that might be a great topic for a future podcast. But a lot of it is done for tax benefits and asset diversification. So we could write off depreciation, mortgage interest, deduction, property tax write-offs. These could be some great tax advantages. And then it could be also like a business. So some businesses specialize in property development or flipping, like buying, renovating, and selling for a profit. So all of it is permitted.
And I agree. I think that would be a great topic to cover is having it in another entity, uh, because that seems like that was one of the points here in for this specific client as well. And that's going to be our next step to dive into really even outside the podcast as well.
Yeah, I think
So,
so too.
uh,
Because I
so
think
stay
it's a
tuned.
great, sorry, just like between the tax benefits, write-offs to deciding which business structure. So I think perhaps that could be something we'll look into for next time. So stay tuned.
Absolutely. And then we do have a lot of clients that actually do that. That's the thing. We do have a lot of clients that when they do invest, the first thing they do, and they'll be advised this immediately, is always have a separate LLC for each property. Well, then, and it's very easy to just jump to do that without thinking of this portion.
Great. Thank you. These are some great questions.
Right? Thank you so much.
Bye.